Well, I'd like to dive straight into what you and I were talking about on the phone last week. You
Yeah,
ready?
let's go.
So you were mentioning, and if you're willing to be vulnerable about it right now, are you? Talk about it.
Sure.
Okay, cool. So you mentioned how was it last month or was it this month that you're only going to close one loan?
Okay. Yes. So it's next month,
Next month. Okay.
August. So to be transparent, I
Vulnerable.
had one
Yeah.
loan when we spoke, and now I have five.
Now you
But
have five.
yeah,
Okay.
but that being said, like
What you were experiencing was still real.
what I was experiencing at that time
What
was
you were
real.
telling yourself, the story you were creating, the narrative, like this whole, oh my God, like I suck kind of thing, right? We'll get
Yeah.
into it.
Yeah,
But
and I think, like, for people that are watching this, I think that what you have to understand is that, I mean, in a normal year, just a normal year, not a 2020 or a 2021, because those are not normal years. In a normal year, I would average about 20 loans a month. Maybe some years it might be 22, some years it might be 18 on average, but it's always right in that 20 loans a month for my personal production. So I do have other LOs in my branch, but they don't roll up into me. So that's just my personal production. Um, and so, just like a lot of people that push themselves to be at a high level, you compare year over year over year, right? And so if
can't
all
help
of
it
a sudden,
sometimes.
yeah, I mean, what I said to you was like, because I'm constantly analyzing, right? What I said to you was, I have to go back to 2011 to find a month where I closed one or two
1
loans,
month.
you
Yeah.
know. Um, that doesn't mean that there aren't down months, because January
Yeah.
of 2020, I think we only closed like six or seven. Um, right? Which that would have been down on average, but generally, 2020 was a different story. I mean, it blew up, right? We got to a point where
Right.
we were closing like 40 or
2019, even 2019, right? 2019, 2020, 2021, and then half of 2022, right?
right.
Those are, I think I heard Ryan say it really well the other day, which we've been trying to remind people for a long time, which is that was a long enough time for people to actually think and change their minds about who they were.
Right.
They
Right.
decided they decided that that's me.
Right.
And when that went away, guess what? Oh shit,
Yeah.
I'm nobody now.
Yeah.
Right?
Right.
And would you say that that's fair to say you feel there's a little bit of that residual feeling maybe still for you?
I mean, yeah, yes, but what I will say is the difference is if you go back and you look at my business in 2013, we closed 210 loans. And then 2014, we closed 220 or something, and 15 and 16. And
Yeah,
so,
17,
I,
18, leading up to the good stuff. Yeah.
yeah, so I, even way before COVID, I was still closing 80 to 90, well, maybe some years was 95 or something. So we were closing, approaching 100 million. Um, way before COVID. So I get it. What was interesting is I know, and Ryan has built an amazing business over a long period of time as well. And so, I think Ryan and I are probably in that same camp where we were sitting back, we're running our business. Yeah, it's better in 19, 20, and 21 than it ever
Yeah,
had
it
been.
kind of like it boosts, right? You might as well pour like, rocket fuel on it at that
Yeah,
point. It's like you were
right.
already a good business and now it's like, phew, and you're
Yeah, I
like,
mean, you had no, like, there was no. It's funny because the sales funnel, right? There's all these steps of the sales funnel. The top one is awareness, and the bottom one is action, right? And I'm talking to a lot of agents when I'm talking about social media right now. Of in the years, especially 20 and 21, um, the funnel was awareness, action. Okay, it was two-step funnel instead of intent, education, consultation, like all of the stuff that clients go through of like, well, hey, yeah, I'm aware of Thomas. He seems like a nice guy. I'll reach out to him, and then I'll analyze what he has to offer, and I'll study it, and I'll compare it, and I'll do all these things before I get to action. In 2021, there were so many people trying to take action, not enough people in the business to even handle all of the action. So it literally was, if you pick up your phone, you get the deal, right? I mean, I tell
Yeah.
the story all the time. One day, so I'm working in the closet in my master bedroom in 2020.
This must be a big closet, Greg.
It's, I mean, it's big enough to have like a desk in it. But
Okay.
it wasn't because, like, I have a giant house or anything. That was not it at all.
I know, I
Literally,
was
this
joking.
is a
It was a joke.
3-bedroom house that's like 2,000 square feet, right? 4 kids on Zoom in the house, a puppy, and everybody's trying to work from home. So Tiffany was working at the dining room table, and she had a whole desk set up. I was in the closet in the bedroom. The kids were in the kitchen at the kitchen island doing their Zooms and
For
stuff
school. For school.
for school,
Yeah.
right? Because they had to be
Yeah.
on Zoom, and it was just a disaster. And then we have a puppy. So the puppy, what does the puppy do? Well, the
Just
puppy,
running
yeah,
around
going
barking,
crazy.
everyone
It's like
calls.
wanting to, oh, you didn't let me out, and you didn't 5 seconds. I was at the door, and you didn't notice. So I'm going to go to the bathroom, right? Like, just stuff like that. So it's just chaos. And one day on my phone, because I didn't have systems set up, some people jumped in, like they figured out some systems right away to handle a huge volume of calls. I did not do that. I had my team. They're all at home. We're on Zoom. Thankfully, I have a great team. We just started like working. We all grabbed shovels and we just started digging, right? Some people were smart, and we both know some of them, and they crushed it during those years because they went out and they bought a backhoe to dig, right? Well, we still had, 6 or 7 people with shovels.
But it
So
was the opposite of like bad survival, right? Sometimes people are just trying to survive. It's like famine, right?
yeah, yeah,
And this was like a lot of businesses probably died from rather than starvation, indigestion. They're
right.
just like, oh my gosh,
Yeah. I
this
mean,
is not.
I had 37 calls to my cell phone, because my cell phone, you know, even to this day is still our main phone. It now rolls over to a phone in the office if I'm in a meeting or whatever. But at that time, there was no office, so there's nothing to roll it over to. So I had 37 calls of people that wanted to take action in one day. Well, I'm one person, and I'm trying to have conversations with people about, hey, here's the benefits of refinancing or buying a new home or whatever it is you want to do. You can't physically, it's impossible to have 37 meaningful conversations. And
Yeah,
those are just the calls that came in on that day, right?
right.
So
It's
it was
crazy.
literally like you're saying, it's you're drinking from a fire hose. So fast forward to now, and obviously, there's days where like nobody calls the phone and says, I would like to get a mortgage. Okay. There's days where nobody calls.
A lot of
Uh,
those days, maybe
there's
or
there's
more.
multiple days like that, right?
Yeah,
It's okay. I mean, we those of us that have been in the business, and we have relationships, we're making those calls happen, but it's not like we just sit here and the phone rings.
right.
We're having to reach out now. So, which is again not a problem. But there's a lot of folks who fell in love with those years. Prior to those years, they were closing maybe 3 or 4 loans a month. Well, you and I both know, because we understand P&L models, is if you close 3 or 4 loans a month, you probably can't sustain uh, even one assistant. Okay, you
Yeah,
probably need to get to like 6, maybe 7, to be able to, and depending on your market and margins and all that,
yeah.
to sustain one assistant, right?
Hmm.
Well, some
Yeah,
of these,
10, maybe 2 assistants. Yeah,
yeah, yeah, yeah. So some of these people, they hired like 2, 3 people, 4 people in some cases, and it was all based off of those couple of years that were really, really good. Now, I increased my team 100%. I increased my team. I've had to lay some people off, and it sucks.
It does.
But, like there's a lot of people they had really, in my opinion, no business hiring if they thought that they were going to continue to do, 10, 15, whatever those numbers are, number of loans per month, because now they're closing 1 or 0 or 2. And
now they should be brokers because they need to make 150 basis points on those two loans.
And now and companies, right? Like big independent mortgage banking companies, there's costs involved, right? So if I have an LO in my branch, he closes or she closes 0 loans, well, there's a guarantee that we have. So guaranteed draw, because we don't want anybody going without food. There's benefits, there's IT,
there's the tech, right? Like little things like, your Barracuda or your not Loan Vision, but like, the tech stack stuff. Like literally there's a fee for some of these things. So it's not free. Yeah.
No, there's licenses that have to be paid for everybody. So I basically tell people, hey, if you don't close any loans, it probably is going to cost us $4,000, let's say, right? For per month.
Your numbers. And I think we're going to get more into that in a second too.
So if it costs us $4,000 and you don't close any loans, we're definitely going to look back and go, okay, well, how's it been going before this? Right? Do you have, now if you have an assistant, that makes just kind of the base assistant pay, now you're looking at your $4,000 is now costing you $8,000 a month if you close 0. So that's a loss to the company, $8,000 a month.
Yep.
If you
there's a huge lack of
3, holy smokes, right? That can get really, really big. Now, what I will say is, if somebody has the ability to stay alive, he has a team, like I still have 5 people on my team. I have laid people off, but I still have 5 people on my team. If you have the ability to close enough volume to cover your costs, even if the company doesn't make a dime in this year, right? Then good for you. That's what your goal really should be, because I don't believe in, hey, you're not making money for the company right now. We got to lay off all of your staff and go down to a skeleton crew, because guess what? When this thing snaps back, and we all know it's going to, it's not going to take much for the volume to pick up.
Yep.
Well, the loan officer that went from 2 assistants to 0 is going to have a really hard time revving their engine up. It's going to take them 6 to 12 months to really rev up. I can literally go from 1 loan a month. If I close 1 loan, I can go to 25 without skipping a beat.
Right. And then you could start hiring if you start to need to do more stuff. Yeah.
Absolutely.
There's a really bad system in the mortgage industry for being able to scale up and scale down during, harder and better times. And I guess I'll ask you, do you even feel like a lot of the people within your own company or previous companies, that everybody has a similar process, right? They kind of have this shared process for how teams work. Would you say yes or no?
Oh, I don't think it's consistent even within our company or any company I've ever worked with. We have our own system. I have my own system.
Exactly. Yeah. And I mean, that is kind of a miss, because I feel like I've seen groups that do this, right? And it could be shout out Jeremy Forcier, right? But I'm confident that someone like Jeremy probably has redundancies, and through his leadership, right? He coaches teams on hey, here's how we're going to build a proper team, and here's how we can have leverage, so that way during the good times we can scale up, and during the bad times we don't have to scale down as much, because we can leverage support that all do it the same way. So that it's probably worth calling it out. A lot of mortgage companies, that's not even their job, right?
Yeah.
They don't even care about that.
Right.
So there's a lot of originators who also suffer as a result because they don't have a good blueprint or process, or leader to look to and say, hey, how can we do this better? That's
Dude,
a huge mess.
I'm with you. And did I tell you that I actually how I set up my team, my branch, I stole that from Jeremy. So
No, you didn't.
shout out
Nice.
Jay
Cool.
for it. So Jeremy
We'll tag
was
Jeremy in this.
Jeremy's been a friend for a while. He coached me for a year
Nice.
straight in the core. He got
Oh,
him as
cool.
a coach.
Are you still core?
What's that?
Are you still core?
No, I'm not. I got out. I was in for
So
about
maybe that's where knowing your numbers comes from.
no, I mean,
It was before that? Okay.
yeah, we can get into that story, but basically, so before I got in the mortgage business, and I've been in for 18 years now, I was a financial analyst. I was a budget officer for the county locally here. So that just kind of comes naturally to me. I'm a bit of a nerd in that way. But anyway, back to so Jeremy, when I was coaching with him, he was just starting to build this idea of building his team and having his team help other LOs in his network and in his branches.
Got it.
And so I kind of just piggybacked on that. I'm like, that's genius, right? Because, I have a team, they're great. And if I can recruit other loan officers in to help spread not necessarily the cost, because I was doing enough business to support it. And so is Jeremy, by the way, or, he was during those years. But it's the stress. If you've got 8 people on payroll, that's 8 people who have families, they have mortgages, they have food to put on the table, vacations, hopefully they get to take, all those things. You want to have a great life for your people as well. And that's a lot of stress when you are the sole provider for those people, when it's your production only for those people. So what I've been able to do by following Jeremy's model is do exactly that. So I have 4 other LOs. Their production helps keep my team, going because they plug into the team. And the cool thing is I think that especially now when you have loan officers that don't have a team, maybe they did have a team and they lost it.
Yeah. Or were forced to scale down. They were told to scale down.
Yeah. I mean, I was just talking to a buddy at a previous company I worked for, talking to him yesterday, and they're literally running on a skeleton crew. Like, I don't think if he wanted somebody to, make him a flyer, he could get that done right now. Because they've let literally everyone go because their volume is down and they're losing money, right? So I think
don't mean to interrupt that. Hold on to that thought, because it's worth calling out that there are so many companies that because they serve an investor or investor base, they have to do these mass layoffs.
Sure.
They have to cut all these things back because they're they're looking at the equation saying, if we get rid of 250 employees, then not only does that eliminate all these benefits and all these other things, right? Like that can get them to a number.
Right.
Well, it's worth calling out that that's kind of screwed up. But sorry, just wanted to call it out. Continue.
I mean, that's it. That's 100% true. I mean, that's what happened with Caliber. Caliber, was owned by a private equity firm. That private equity firm decided to cash out. Good for them, by the way, because they cashed out in the third quarter of 21 is when they executed that.
Is that like the height? It's close to the height.
I mean, it's as close as you can get, right?
You don't want to wait until it's like, cool if it's the height, but that's riskier. So anyway,
so they started it. I don't know exactly like when they handled the valuation. I think it was August of 21. And then the takeover by New Res was 22. But yeah, I mean, they timed it perfectly. That stuff happens. And it can happen to anyone. Movement Mortgage, where I'm at, is owned by a private foundation, and that foundation basically has one person, and that's Casey Crawford. So, but there's nothing that says Casey couldn't decide to
You know,
sell
yeah,
someday.
sell it, cash out. And a lot of his equity is, well, not just his. Let's be fair.
Yeah.
A lot of companies, mortgage banks, right, like this,
Yep.
their wealth is tied up in the company. So when you want to access it, guess what?
Yeah. Right.
Like there's strategies that they implement to access it. So you can't hold on to it forever. That's
Right.
just the truth. Yeah.
Right. Yeah, exactly. I mean, I think, everybody's trying to figure out like what company to go to and all that. And I think, you can't,
Grass is greener where you water it.
it is. And, you can't avoid change. Okay. Change is a constant. I worked for Washington Mutual. I worked for Wachovia, worked for MetLife. Like there's three big names in the mortgage industry that went out of business. MetLife just decided to close down their mortgage business, but the other two, WAMU and Wachovia, just went out of, they're gone, boom, poof, in the night, right? So, you can't ever like avoid change, and you shouldn't, right? You should just try to find what is the probability that the company you go choose is going to be the best company for you and so you can serve your clients at that time. Okay. Possibilities, anything is possible. I could literally fall off the chair I'm sitting on, hit my head and die right now. It is possible. It's not probable because, I'm kind of nimble still, but I'm teasing. But you know what I'm saying? Like a lot of people like freak out about this we experienced this when there was some big changes at my last company, and there's a lot of people that just haven't moved. They're just riding the wave of the last company. And I know it's not good, but they're just kind of like, paralyzed. They don't want to make a decision because they're afraid of making the wrong decision.
Exactly. And not making a decision is making a decision. And I mean, that's a maturity thing, right? Absolutely. Would you agree? Like that's a like growth experience. And
yeah, I think also
we're going to make bad decisions. Actually, you know what? And by the way, we're at 4:00. Do you have time?
I do.
I'm just checking with you.
Yep,
15 minutes.
No, my next
cool.
My next meeting isn't until 2:00 my time. So what's that?
Your time? Okay, cool.
Yeah.
So with that in mind, did you see Sean Herrera's post about like the warrior of light, right? And embracing the challenge and how he, has done some coaching for like Cindy Ertman's group. Did you see that?
I didn't see that.
Okay. So totally, I'm going to ask you a question at the end of this around how you face these challenges, because some people do have a good mindset, right? Where it's a bit more natural. It's a bit more natural that when challenges arise, they're going to passively just automatically say, how do I handle this challenge, overcome this adversity, right? So,
right.
Sean was talking about this excerpt from this book. He highlighted it and just, really how there are some people who the book refers to them as warriors for light, and how when a challenge arises, it's just kind of a little bit more natural where those people think to themselves, how do I overcome this challenge? What can I do? Right. It's almost like this concept of life, instead of life is happening to me, it's life is happening for me.
Sure.
So how are you going to handle that? So quick shout out to Sean. Good job.
Yeah, Sean's dope.
Let me ask, is it natural for you? And then for people that it's not natural for, maybe you've coached those people, maybe you have loan officers like that. How do you advise and help those people kind of handle challenge and adversity better?
Yeah. So I'll tell you, I don't even know when this happened, but at some point in my life, I had an epiphany that, if something bad happens, that you give yourself a period of time to kind of be pissed, mourn, grieve, whatever you need to do. Obviously, there's different actions require different timeframes around that. But like a lot of times in our industry, I find people getting really worked up about like, oh, they didn't get a favorable underwriting decision that they thought they should have gotten, or they lost a deal to somebody who had a better price. And while that can be frustrating, especially now when every deal might be the one that puts food on your table for next month or not, right?
It really matters.
you have to look at it and say, okay, I can be upset about this, but then I need to move on, because it's kind of like golf. So I played golf competitively for a long time, amateur wise, but never played in the pros or anything like that. But if you hit a bad shot and then you're still angry over the next shot, the chances of that shot being a good shot are not good. Right. So then you hit a bad shot and maybe you say, oh gosh, you know what? I'm going to make a bogey now. And then you get refocused, hit the next shot. And if it's a good one, you might actually, hit a really, really good shot and salvage a par. But if you're upset and you're all pissed off, that bogey now that you think you're going to get might turn into a double bogey or a triple bogey,
right.
because now you're just pissed and you're stacking pissed on top of pissed. And you can't
it's compounding.
Yeah, it's compounding, and you just can't do that. It's I see it makes people make horrible decisions, right? So I've really gotten good at giving myself a few minutes, whether that's 5 minutes, 15 minutes, whatever, to be upset. And then I move on. Right.
Smart.
And it's really hard, especially right now, because, everybody's using social media and stuff like that. So you could see like your best real estate agent that is like your best friend. You also have like, whatever, you go fishing together or what, and then you see that they closed a deal over here on 123 Cherry Street with a lender from across town that's your rival. And now you're like, what's going on? Why is he closing a deal there? Like, we just went fishing this weekend, or, and that stuff can all.
Did this actually happen to you?
This stuff happens all the time. Yes.
Okay. I was just curious if that was an actual.
But it's not. No. Like, I don't have a fishing buddy or anything. I don't fish.
Okay.
I would like to. I just don't have time to. But that's an example. But that kind of thing happens all the time when you're like, well, wait a minute. You just told me that I'm your favorite lender, and now you're closing a deal with this other person and giving them shout outs and all that. And I think, that's just an example of something where it's like, okay, cool. Like, what am I going to do about that? Because a lot of times when things happen that upset you, you are the cause of it, right? And sometimes you're not, but sometimes you are the cause of it. So if I lose a transaction because somebody had a better price, I don't get upset anymore and go, oh my gosh, like I got to talk to our secondary marketing department and figure out why our margins are so high and blah, blah, blah. I don't go to that anymore. Maybe I did earlier in my career. I'd get upset about it. But now I look at it and go, I didn't add enough value to overcome a price difference. Right. So I get very I get very introspective when something doesn't go my way, and I look at it and go, okay, what did I do? And I think for competitive people in all industries, and a lot of successful salespeople are competitive, right? Competitive people don't always want to take the blame. So to use the golf analogy again, if you've ever been watching golf and heard, the golfer yelling at their caddy after they hit a bad shot, caddy didn't hit the bad shot. But that's kind of the caddy's job, is they, that's how they offload their problem on somebody else and not take the blame themselves. Right.
Versus practicing extreme ownership and saying, oh, well, like, what could I have done better? And instead of yelling at the caddy, you just say, oh man, maybe if I had have just like, next time I want to do this better. Yeah. And then it inspires the caddy to say, you know what, Greg, like, actually, I should have thought about this other thing. And you know what? I was thinking about suggesting the 7-iron and I should have said something.
Yeah.
I'll segue that into what I heard a little bit of what you also talking about, which do you know Jonathan Roach?
I do. Yeah. I know who he is. Yeah. I don't know him.
So I heard him on one of our company calls, he was, and also in Vegas at Mastermind Summit. So he was talking about, the negative voice and how the negative voice is always focused on results. Right. You didn't hit that shot well, right? You didn't get that loan, right? Your positive voice is focused on efforts.
Right.
So a lot of people get wrapped up and just chase that negative voice, right down to the bottom, and they can't overcome it, right? And it's probably a life skill, right? Like being able to stop yourself and like give yourself some time to be angry and then coming back from it, right?
Right.
So if anybody wants to get better at it, first off, maybe go listen to some Jonathan Roach and pick up golf, right?
Very
right?
humbling
If they
game.
want to improve it. Yes. Would you add anything else to that?
No, I agree 100%. And I also think as an industry, we are guilty of not supporting the activity as much as we are the result. And I mean, and unfortunately, like it's kind of how it works.
It's a human thing.
Yeah.
It's to focus on that's kind of a more natural human thing. And do you mind if I back up to, I guess, where we kick this off?
Sure.
And I guess wrap up with this in a little bit here is you had mentioned to me that you kind of had struggled with whether or not like that feeling like you were only going to end up closing one loan in August,
right,
kind of overwhelmed you with this feeling of, do I say this out loud?
Yeah.
Like,
sure.
Well, that your negative voice is now talking to you, right? Like your negative voice is controlling you a little bit there. And I remember you because your company already knows that this is like what's happening, right?
Sure.
And I think some of the words I shared with you were, don't make the mistake of comparing 1 month to your last year or your last 10 years, right?
Right.
And but not your 2020 or 2021. A lot of people make the mistake of comparing to that. That doesn't count. We already covered that.
Right.
But when you look at it over a longer period of time, if you're consistently closing 20 loans, like, can you go back for a second because now you're going to close 5 in August, you think, right?
Right.
But go back to that moment, because I think that there's a lot to be gleaned from like the negative voice and how your positive voice really triumphed and pushed you through that because you were focused on the efforts, right? That's how you got to 5.
Right. Yeah. I mean, I don't like, I look at it always as what else can I do? What is something I can do more? Like, I went from a guy that, had the team and I still have the team, by the way, but I had there was a lot that I didn't do for a lot of years. I was working at a higher level and I literally go to open houses on the weekends. I am, teaching right now. I'm teaching agents social media and video and trying to help them build their game. And I'm spending a lot of time doing things that maybe I haven't done in years and years and years. I'm still going to have a great year. And I know that. I'm not worried about that. But like when I'm talking about, do I share that I've only got one loan or had one loan at the time? It's a tough thing because sometimes people hold you up on a pedestal, and that happens, especially now. I think my business is down by 50% year over year. But like even that is pretty darn good when you think about it and you look at where other people are. There's literally loan officers that are trying to figure out if they can stay in the business. They're going to have to go make a career change right now. A lot of them, because they can't generate enough business to sustain it. And so I think that's where it hit me. And I'm like, I have to share this. It's not a matter of whether I want to share this and I want to be vulnerable. I have to share this because
there's a lot of people who feel the same way, actually, right? And not just even in our industry, right? There's people outside of the industry that they like that their paycheck, right? Like, oh my gosh, like I need this to feed my family. Like I need this to. So, yeah, I think it's we could have a whole nother episode on being vulnerable, right? Because it was Neil Patel. Was it Neil Patel? Who was talking about? No, it was Chris Do talking about weakness is strength, right? Yeah, because he was using the Marvel analogy of Marvel heroes, and so I was sharing that on a Clubhouse call earlier today with some agents who and it does seem like a lot of agents, they're so used to being this polished, pretty Barbie, right? Barbie, the movie just came out. So, hey, whatever. It's like,
Love all the Barbie.
it's a whole new world to be this vulnerable version of yourself that, because when you take an Instagram picture, which, for all of us who remember when MySpace, Facebook, Instagram first came out, pictures were the thing, right?
Yeah.
So a picture you can make perfect, and you should make perfect because that's the point, right? If you're taking wedding photos, you don't take shitty wedding photos, right?
Yeah.
We have to retrain ourselves because, this whole thing isn't about social media, but it's more about, I guess, just embracing change, right? And overcoming that challenge. And this is happening for me is there's a huge hurdle to overcome when you shift your mindset to, I'm going to post imperfect, shitty videos.
Yeah.
But that's what people want anyway. And I've heard it from multiple people at this point, how when you post those videos, like if you were to ask do you have younger kids, Greg?
I do. Yeah.
Like I've heard some people say how when they see their kids like sending really awful photos to each other, right? They're like texting each other like the ugliest things. Yeah. Like it's almost like a game. And they don't even think about it. Like at one of my friends, Liz, she was literally mentioning, maybe Liz Reese, she's in Neil's group. Yeah. She's the one who shared that with me. Is like she asked her kids, like, why are you doing that? And it doesn't even register for her kid. Her kid's like, what do you mean? Like, why wouldn't I? It's kind of like the point. It's authentic. And I also agree with Sean Herrera on this, that we need to remove the word or the term like, just be authentic. It's like, what? Like, why do you have to be authentic? Like you should be authentic. Like that shouldn't exist. But so you're helping realtors with their content. How do you kind of help them specifically with that? And then we'll wrap up here. How do you help them get over that hurdle of like, oh man, like I suck. Like, well, just do it scared. And who cares if it's a little ugly, right?
Yeah. I think, the first thing when I open up my class, I tell them, how old I am. Right. And the reason that's important for this is that there's a lot of realtors that are older and did not grow up with, any of this stuff. Like we didn't have, when I was in college, we didn't even have the internet. I think Al Gore was still working on it back then, but like it wasn't.
You're very seasoned, Greg. You're seasoned,
right? Like, so we didn't have laptops. We literally had typewriters and stuff. Right. So it was a different world. So if you look at like kids today, I just met with this realtor last week. She's 23, great kid. I know her grandfather, so like that tells you something. And I was telling her about this class that I'm teaching. She's like, "Oh my gosh, like, don't people know this?" And I said, "No, they don't, because you grew up with this." She was still in high school doing Instagram and stuff like that, and not like some of us picked up Instagram in our 50s. And so, that's really hard to learn later on in life. So I'm trying to, I'm telling them, what we all know is, hey, get over what you look like and you sound like, because that's what you look like and sound like, right? That's easy, but there's still a lot of people that are petrified of their face and their voice and things like that. And so I'm also sharing ways that they can share content, make content that doesn't even include their face or them on video at all.
Nice.
Right. Because, it's not about that. And I share some of the reels that I've done that have gotten, really high number of views, at least from my standards, which, I'm not an influencer and I'm not trying to be an influencer, but, people show interest in some of the videos that I have that have nothing to do with mortgage. They have nothing to do with me or my face or my voice on them. And I get great engagement and people making comments that then I can comment back and stuff. So I'm just showing them and trying to teach them this idea of, hey, you guys are already marketing. You're marketing your business. And how are you marketing your business? Well, show of hands in the room. How many people took a buyer out in the last week? Almost everybody raises their hand. Okay, how many buyers? Was it one? Was it two? And most people say, yeah, one or two. And I said, okay, well, cool. So you spent maybe, let's say, an hour with that client. you spent maybe a half an hour and a half an hour commuting both ways. So let's say that's 2 hours of your time and you touched 2 people. But now, what if you took an extra 5 minutes and while you were touring this home with these clients, you shot a video, put some catchy music to it, put it up on social media, and you got maybe 100, or here's an example of one that got 100,000 views, right?
Yeah,
So
it doesn't take much effort, but it does require some retraining.
it does. You have to retrain how you think, because most people that are my age think, I don't want to post the pictures of my lunch. It's none of anybody's business what I'm having for lunch. Because remember, when Facebook first started and Instagram first started, and I was also like a non-believer, that's what everyone did. They like, oh, hey, look at my steak and, whatever. And they just posted a picture of what they were doing. And a lot of people found that to be like, that's boring. I don't want to see what you're having for lunch.
But it was a trend for a while.
It was a trend. And you could still do it. I don't care. I mean, I still, if I go to a restaurant that I don't get to go to and it's kind of popular, I'll take a picture of my burger and fries and say, hey, I'm at the In-N-Out or whatever. So
what would be better though is make it a short 30-second reel, right? Just grab some videos of like, oh, here's me walking up to the counter. Oh, there's my food. Oh man, this is good, right? Like,
totally.
Guess what? People are going to be like, oh my gosh, I freaking love In-N-Out. Yes, let's go.
Yeah, right.
So don't take a photo of your burger and expect it to get a bunch of likes.
No, and you're not doing it for that, right? So but I'm just trying to retrain.
You're doing it to connect with people, right? Like that's the point. Is we're trying to have raw, connection with people because we want them to remember us, right? Like we're day trading attention, right? So it's like, okay, be memorable.
It's true, and you're right. I mean, attention is the new currency, right? And so it's interesting because I do feel like there's a lot of influencers out there. And I think right now in today's world, I think we can point to some of these or most of these influencers and go, okay, well, their activities online are not resulting in closed transactions.
Right. No, it's based on views.
But if they do it right, and if they are actually adding value with their influence, they will get there where it will start monetizing itself. And it'll monetize bigger than somebody who is not doing it at all. Right? So that's really what I'm trying to, let people know is, hey, you don't have to be an influencer. You don't have to take a picture of yourself in a bikini on the beach in Hawaii.
Yeah, I'm not asking you to do that. Like that's not what we're talking about.
And so that's kind of what I hear a lot of times is people they equate being on Instagram or being on Facebook with being an influencer. And that's really not what it is. It's you have a sphere, and your sphere might see you at church every Sunday. Or they might see you at the golf club, or they might see you at dropping their kids off at school, right? But do they know you on a deep level? And is your sphere so big that there's no way you could have like an in-depth lunch or a coffee with everybody in your sphere and still get all the things you need to do done, in life? Well, most of us, we don't think of it that way. But our sphere is that big. Like, I mean, I don't know. I don't know what the number is, but I would guess there's probably 500 people in this world that feel like they're in my sphere, right? So how am I going to talk to all 500 people in a meaningful way to let them know what I'm doing, what I'm about, if anything changes? The only way to do that is on social media. So whether you like it or not, people are looking for that connection. So if you're not out there, like I equate it to if you've ever been flipping through the 1,000 channels or whatever we get online now, you're flipping through the channel and you find a channel you really like, right? And you're like, wow, this fishing channel or golf channel, like this is really cool. It's a new one. I really enjoyed it. I watched it for an hour or something like that. And then you turn the TV off and you come back to it the next day. You're like, man, I hope I hope that channel is on again, because like I really enjoyed that. You turn it on and the screen's blank. Now you're bummed out. Now you're like, what happened to my favorite channel? My new favorite channel's gone. All right, well, I guess I'll move over here to the golf channel. Well, you're not going to go back and search for that channel most likely because it was off. So that's where a lot of people don't understand. They might see somebody in their sphere every 6 months, or they might see him every month. But in between there, if they could stay in touch with that person, at least on the surface level of like, hey, I'm at In-N-Out today. I'm doing this, podcast today. I'm doing this thing today, whatever. Like, you're staying in touch with them. So guess what? When they go to act on buying whatever it is that you sell, then they're going to remember you. And you'll have less likelihood of those situations that we all hate, which is all of a sudden we run into this person at the grocery store. Hey, it's been a long time since I've seen you. What have you been up to? Oh, we just sold our house. We just moved. Yeah, dude. Oh man, you're a real estate agent. Oh, I totally forgot, bro. I'm sorry.
Yeah.
Right?
Don't expect that, don't expect a different result, right? Because that's what's going to happen, right? If you're not putting in the effort to create a different outcome. 100%.
No, I get it. And some people hate social media, and I don't necessarily love it, but it is one of those things that I look at as something my sphere wants from me. And if they don't want it, if they don't want to see what I'm eating for lunch, scroll to the next person, right?
Yeah.
And they'll scroll back, but they saw. And if I called them and I said, hey, Thomas, see what I had for lunch today? You might have watched 1 second. You're going to be like, yeah, dude, I saw you were at In-N-Out. Like, I love In-N-Out, right? So, there's that stuff is
to connect.
It is.
And if you're not throwing out enough opportunities to connect with people, then don't expect that different result. When you bump into Jennifer at the grocery store and she's like, ooh,
yeah,
that's right. Sorry. Yeah.
Who was on stage at Forward? And I can't remember who this was, but they basically said, if you want more business, shake more hands. And I don't know if it was Ed Milet.
Kevian?
It might have been Kevian. But it stuck in my mind. I don't know who said it, but somebody said, if you want more business, shake more hands. And it's like, okay, cool. Well, that handshake doesn't necessarily have to be a physical handshake. But I will tell you, I feel like in this market that we're in, I feel like I am gaining market share, even though we just talked about, a really bad potential month coming up.
Right.
I am gaining more market share that my competitors are losing because I'm staying in front of people. And that's it. And I'm just going to keep doing more and more of it.
Oh, I love that, dude. Thank you for spending the time, dude. We wrapped all those things, I feel like, perfectly together as well. Social content, right? Like kind of mindset, right? Like not judging yourself or comparing yourself to other people, knowing your numbers, right? Building a team, being able to scale up and down. Like, I think it all comes back to mindset around growth. And hey, I'll throw in a shameless plug, right? The reason that I started this podcast was it's called the From Experience Podcast.
Right.
Is there's only one of two ways to get experience. You either have to go through it or you can learn from somebody else's. So, hey, shameless plug. Maybe that'll be my tagline in the future. I don't know.
I love it.
But
I love it.
That's the point. So anybody who listened to this, you probably learned something, right? Or you can relate because you've been through it.
Yeah. Everything
So,
I've learned, I've just learned from listening to somebody else or watching somebody else. Right.
imitation is the best form of flattery, right? And it's not always perfect. It's not always right. You'll make a mistake. It's okay. Don't be upset. Let's go again.
Yeah.
Yeah.
I love it, man.
Well,
I appreciate you having me on. Super fun.
100%. Well, cool. What was that?
I said this is super fun. So
it is. So, hey, I'll show you. Stick around, actually, because once I hit stop, it'll finish uploading. But for everybody who stayed this long, I love you. Please text me that you actually heard me say this, and I'll send you a gift, actually.
Yes, that's so good.
There you go. All right. Peace out, everyone. Thanks for watching. Thanks for listening.
Thanks.